It is Wednesday, October 21st. We're 3 hours into trading. Hello, traders. Let's take a look at what the market's doing. Right now, we've got very choppy conditions. 1 minute sounds like these stimulus bill negotiations are going great. The next minute sounds like they're not going so well. This could be a lot of lip service. Here's one thing that I know. The only thing keeping the market afloat right now is the promise or the potential for a stimulus bill before the election. If this doesn't happen by Friday, we're going to see a market decline into the election. I think that a lot of people are really worried about the election results not being available for 3, 4 weeks, that possibly all the mail in ballots that are out there could prolong that process, and there could be a lot of indecision, a lot of uncertainty. So it's best to just go to cash. That's certainly my perspective. You know, from my analysis a couple of days ago, I had mentioned that the heavy selling that we saw Monday was a very big warning sign. So let's take a look at the daily chart before we go any further. Here we've got the S&P 500, and you can see how we've got this upward sloping trend line right here that's been breached to the downside. Okay, not great, but not particularly problematic if it's just one day that pokes below. So this is from last week, and I expected to see a nice bullish candle that would form a bullish flag right there and poke and possibly challenge the high. We had earnings season coming up, and with regards to the stimulus bill, it's not like we won't have any stimulus. Even after the election, there is going to be a stimulus bill because both parties want it. Republicans want it, Democrats want it. It's just a matter of how big it's going to be and how the money is allocated. But both parties want the stimulus bill. So, in the course of the next few weeks, the market is going to get its fix. And I thought that that would keep buyers engaged, that along with earnings season coming up and mega cap tech earnings in particular, that usually keeps shorts at bay. As it turns out, we've seen heavy selling pressure, and you can see how we had this long red candle closing on its low Monday. Yesterday, the market tried to bounce, and you can see how that early bounce faded and we closed on the low of the day. Look what happened today. That's how the price action is unfolding today as well. Long tails above body, that's very bearish. I believe we're going to test the 50-day moving average right here, and that comes into play right at about 340 on the SPY. If this fails, we could come down to the 100-day moving average. Now, I don't know if this is true for a lot of you, and I hope that you post this in the comment section of the YouTube video. I've been asking a lot of friends, actually, they ask me what they should be doing into the election, and I asked them to tell me first what they're doing. And I'm hearing a lot of people, in fact, almost all of them say that they are lightening the load in equities and they're going to cash. They want to wait until the election results are known, and then they'll decide if they want to come back into the market. If that's true universally, then we're going to see a lot of outflow from funds, and that's going to force asset managers to start selling some of their stocks. So we'll see if that's actually what's happening. I believe that it is. All I need to do is to look at price action. And this price action right here that we saw, this long red bar, instead of having a bullish flag where the market would rally up and take out that tiny little downtrend, then we would have confirmation that we'll probably test the all-time high before the election, and that stimulus bill is really all that the market cares about, and that it's going to get it sooner or later. Now, what this bar right here tells me is that the only thing that was keeping the market afloat was the fact that a stimulus bill might come before the election, because buyers were still engaged and they were offsetting some of that selling pressure. Now that that stimulus bill before the election is in question, we're starting to see that there is a lot of profit taking out there. And we get this long red candle closing on its low. Now, all of a sudden, the character of the market changed dramatically, and we have a lower high double top. And this upward sloping trend line that was breached, now we are staying below it, and we are not bouncing right back above it. that becomes problematic. This 50-day moving average, I feel, is going to be tested. So we'll see what happens in here, but I believe that you need to be short. We had a lot of bullish put spreads out there. I did not hesitate when I saw the price action on Monday. I sent an email out Monday evening, and I said Tuesday on the open, our number one order of business is we need to shut down our bullish put spreads. We were able to buy all of them back in for a scratch or, in some cases, a nice little profit. But we were able to get to cash with the exception of one stock because it's moved against us. So we're currently monitoring that bullish put spread. I feel pretty safe with it. And I'll show you what the spread is. It's CLX. CLX is coming up on earnings. You can see how it's actually been pretty strong today given the market selling. And I feel that consumer staples stocks are going to fare pretty well if the market does decline. We saw Procter and Gamble come out yesterday with a good earnings report. So I believe that CLX, especially with the resurgence of the coronavirus, should do pretty well into earnings. We're going to hang on to the spread. We're barely in the money on it. They announce earnings in November, so our expiration date is October 30th on these. We have time to see how things play out. Now, everything that I've just told you could change at the drop of a hat. All we need to hear this afternoon is that Nancy Pelosi and Steve Mnuchin have agreed to a stimulus bill and the market, boom, will be off to the races. Will it challenge the all-time high? I doubt it. I still think that the selling pressure is going to be relatively heavy. I still think that investors are going to be cautious going into the election. And that stimulus bill is going to be needed in a very, very big way because we have lots of major metropolitan areas that are currently going back into shutdown mode. Almost all of Europe is in lockdown mode. The coronavirus is spreading there rapidly. That puts a lid on global economic activity and it will weigh on earnings, which, by the way, Q3 earnings are just starting to be released right now. The expectation is that profits will be down 20% year over year. Now we've got an S&P 500 that's trading at a current PE of 23. Folks, that's rich. That is not cheap. So there is plenty of room for disappointment. You throw in the fact that coronavirus is starting to resurface again. I think that there are some serious undertows to the market right now. And all you have to do is to take a look at the price action and you can see it. So we've got this long red candle here. We've got the halfway point of that long red candle is preserved. We have tails above body, closes on the low. I believe we're going to see another wave of selling. Could even happen today that tests that 50-day moving average. If that support level fails, we could see additional selling into the election, particularly if the stimulus bill agreement is not reached by Friday, because that pretty much is the drop dead date for it even getting passed before the election. So that's how I see the market unfolding. As a result, I'm going to be looking for some bearish trades today. I'll look at maybe a swing trade and I'll show you how I'm finding some day trades. So early in the day today, Netflix post-earnings announcement, you can see it has been in a choppy downtrend when it took out that low of the day. That was a nice short right there. I shorted Etsy earlier today. That was super nice. How did I find it? Well, it came up on my heavy selling list and also my relative week 30 list. And we'll put the SPY overlay up. And we'll go back to this 5-minute chart here so that you can follow along tick by tick and see how that trade set up. You can see early in the day we had the SPY long green candles closing on their high, and then all of a sudden long tails above body, tiny little candles in here. So the market was ready to roll over. This is heavy selling in here. These are long red candles. This is the move of the day. Now, right in here, about 20 minutes ago, we had news that I can't recall if it was Steve Mnuchin or Nancy Pelosi who said that the negotiations, they're pretty happy with the way negotiations are going. So what happens to the market? boom, liftoff. Well, wait a minute, not so fast. Long red candles immediately erasing this. What information can I glean from that move? That's pretty straightforward. Only a stimulus deal is going to matter at this point. All the sweet nothings, all the lip service doesn't matter. The market wants a deal right here, right now. And if it doesn't get it, the selling pressure that we're seeing is going to overcome that bid, those buyers who are holding out for a possible stimulus bill rally. And that's exactly what we're seeing. We're seeing the market continue to drift lower right here. And you can also see that we've had a bearish divergence right here in the 10p indicator. You've got the indicator moving up, the market really sideways. So I wouldn't trust it too much because there is a strong downtrend right now. These long red candles tell me that the market wants to go lower. At very least, I expect SPY 341 to be challenged today. If that's challenged and there's no deal today, I think the market is going to send DC a very strong, very clear message. We'll test the 50-day moving average, and the message will be get a deal done. So let's take a look at some of the stocks here, knowing that we want to have a bearish bias. And Etsy was the one that I wanted to show you this morning. So we've got the SPY rally, rally, rally. What's the stock doing? Down. That's all I needed to see. I shorted the stock in here. I covered in here for a nice gain. Let's take a look at that D1 chart, the daily chart. So I always look at the daily chart before I take a day trade. That's because I want to know that I have the wind at my back. Is there something significant going on in the daily chart that allows me to take that position? If by chance I get blindsided by some kind of stimulus news today and I have to hold the position overnight, would I be willing to? That's the premise that I use behind every day trade, and it happens that sometimes I do have to hold a position overnight, but I know longer term the stock should continue to move lower. Well, the clue here for me was that failed breakout. So that was the high, that was the breakout. A lot of people buying in here on that breakout. As soon as we go below it, they start bailing out of those positions and breaking even, and that creates additional selling pressure. So the backside of these can be very, very nasty. That's why I liked ETSY. CRWD. Same deal going there, except we had an upward sloping trend line that was violated on the downside. 3 days of fairly heavy selling, and we've got this horizontal support level right here that was breached. That was resistance. Market or the stock rallies above it. Now that should be support. That was violated. Made really nice money on that one today. I think I made almost $2 on that. We'll put up the SPY overlay. You'll be able to see it. And there's the market up, up, up. There's the stock down, down, down. There's a really nice winner for me today. Looking for another stock that I got on early today that was really nice also, TWLO. And TWLO, you can see very persistent selling, market up, stock gaps up, and it has a gap reversal. We had this nice little long green candle right here when the market was still going up, but it gave that up very, very easily. Even when the market was pushing higher, it was starting to fail. And as soon as the low of the day was taken out, I knew that I had a decent trade, made $3 on that trade. So really nice, big, meaty wins on the short side today. The short side has been very, very difficult to trade previously because it would be nothing, 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 and then wham, you get one really long red bar, and then the market or the stock retraces little by little, and then wham, you get another big drop. Very hard to stick with those positions. So when you do get the big drops like this on your shorts, I suggest taking profits, especially in a very newsy environment. I am trading half size today, and I don't normally place hard stop orders, but I am today because I don't want to be blindsided by news that comes out instantly, just like that event that I showed you right here. I don't want to get caught. I'd rather stop out once I have profits in the position. I place my stop at that entry price so that I'm not going to lose a lot of money on the trade in case I get blindsided by some news. RUN, really nice. I am currently short this one. And here you can see market up, stock down, but it is a choppy one. You had to wait for these tails to kind of run their course because that is a sign of a buyer in this level. So once we drop below it, that buyer is gone now, and this stock looks like it could see some fairly steady selling pressure. The D1 chart, there's your previous resistance. Now that is a failed breakout, and you can see the selling on the backside's been heavy, and we're right at that 50-day moving average. We're below it, so that's the other reason that I'm fairly confident in this trade. I've got some staying power, so I'm going to stick with that trade. Continue to go down the list. Texas Instruments, that's an earnings stock. You can see how it has a failed breakout right here. I think this is going to be a good longer term short. So what you can do on a stock like Texas Instruments is you can start taking a look at a bearish call spread up here near the all-time high. And the way that I would approach that is I would bring the option chain up. I'm going to go with the October 30th expiration. And I'm going to be looking at the 154 call spread because that would be the all-time high. We'll see if we can get anything. Yeah, the 155, 157.50, we're not going to get much for October 30th. That stock is already pulled away from it. But that's the type of setup that I would be looking for. You look for these failed breakouts. Now we're back down below that horizontal support level. We should see continued selling on the backside. Would I want to buy any puts? I could actually buy a put spread in here as well, and I would expect the stock to rest on that 50-day moving average, which comes into play at 142.50. So I could buy an at the money 145, 142.50 debit spread. Let's take a look at how much that's trading for. And we'll go down to the 145 strike. Again, we'll keep this fairly short term. There's the 145 put. And if we go down to the 140 strike price, we can see that that spread is currently 101 bid offered at 186. Could I get in on that spread at 150? It is a 5-point wide spread. So I would be risking $1.50 to make 350. Yeah, I think that could be a pretty decent spread, especially given the negative reaction to the earnings from Texas Instruments today. I think that it could pretty easily get down to that 140 strike price. If you wanted to tighten it up a little bit on that 50-day moving average, you could also do that. But the spread's not going to widen out very much. You want to have your strike prices nice and wide so that these options go up in value much faster than those options. If I go down to the 142 strike, yes, my initial entry price will be smaller because there's a smaller debit that I have to pay for it. In this case, I might be able to get in for $1 or so, but my max profit would be $3 on that. I would try to get out of the position if the stock starts to find support at the 50-day moving average, take profits when it gets down to that 142 level. So that's how I would play it. Know that you could get blindsided by a stimulus deal, but this stock looks like it's going to be fairly weak. I don't know that it would rally for a very long amount of time, even if a stimulus deal were announced. So that's how I would trade on a swing basis right now. I would use a spread like that. You may not have to wait for more than a day or two on Texas Instruments for it to come down to that level. It's pretty weak today. You could do the same on any of these. Etsy, Crowd, both look good as well. Abbott has fallen today. Abbott's on the 50-day moving average right here. It seems to be finding support right there. Taking a look at what else we might have on the radar here. Going to go into relatively weak. Tesla's announcing earnings after the close today, which if you are a trader and you like to trade earnings, there is a search or a tab actually that's called pre-earnings options. And on this screen, you're able to see all of the companies that are going to be announcing earnings. So here you see Tesla. These are all sorted by option liquidity with the stocks with the greatest option liquidity listed at the top. And here you can see on Tesla that the expected move is about 17.5%. The average move is about 8%. And you can see here that the percentage of times exceeded is about 6%. So buying a straddle on that stock going into earnings is not a great play. But if you were to look down the list, you can find stocks like CLW that have a much higher probability of exceeding that expected range. And those are the types of situations that you would want to look at if you were buying straddles. If you were selling straddles, then Tesla would be a great candidate for you. Just a nice feature that I have in Option Stalker. So we'll take a look at relative week here, see if there's anything else that's coming up. Piton's been a really big runner. That's starting to roll over. That's a nice little breakdown right there. I think I'd be more interested if it takes out this support level right here. So I'm going to put a GTC alert line right there. I'm going to want to know about it. Whenever you're flipping charts, if you see stocks like this that set up nicely, and I had mentioned this to everyone in the chat room today, so as I'm flipping around, you can see my alert lines on FDX. Look at how tight that trend line is. When it is super compressed like that and super tight, and you can see something visually that's just that glaring, set those alert lines. My goodness, when this breaches that support line, I want to know about it because there's probably going to be 2 or 3 other strong days of selling afterwards. How do you know, Pete? How's that? How could you possibly know that? Because let's imagine that you bought the stock. Where will I have my stop? Where would I like to get out of this stock? How will I know when it's finally reached its high? I think I'll draw an upward sloping alert line, and when the stock drops below that trend line, I'll get out of the position and I'll take profits on it. That's exactly what everybody's doing on it, and that's how I manage a lot of my swing trades as well. I draw these alert lines, and when that trend line is violated, especially when it's this obvious, then you know there's going to be follow through selling on the backside. Well, if I don't have a position in FDX, I sure would want to ride on those coattails of people that are getting out of that trade, and it should have 2 or 3 good days of follow through. That's how you do it. That's how you set up your swing trades. So we'll take a look and see if there's anything else that just catches my eye here. DOCU's been a really strong stock. You can see some nice selling pressure there. That's a legitimate breakout in there. Don't pay attention to that too much. But yes, this is a nice little breakout. That's failed. Needs to get below the 50-day moving average. Then I'm really interested in that one as a potential short. So might as well drop that alert line. That's below the 50-day moving average, but at least I'll know when that happens. I'm going to take a look at one more list here. Pop Bear, nothing came up. Pop Plus Bear, these were stocks that were on the list the day before. NVAX, I should address that. I'm sorry. It breached the 100-day moving average. This was a bullish put spread that I had highlighted in a video last week. You needed to buy that spread back. That was a loser. Going to continue to click down the list. Let's see what else we've got here. Lyft, that is definitely a bearish formation. See how the stock is continually drifting lower. Now on this one, you may want to set a GTC alert line that would go something like this because you're seeing a nice downward sloping trend line in it. But yes, very weak price action on Lyft. Continue to take a look. That's a horizontal support level. That's also the 200-day moving average. Symbol CLDR. Nice looking short. Put up the SPY overlay, and we'll go into the 5-minute chart to see what it's doing today. And you can see market up, stock down, compression while the market is going up, and then it finally gives in as soon as the market starts to roll over. Good night. Right now, it's starting to find some support here. 1, 2, possibly 3 lows here. So I think that the stock might have found support for the day, but any rally will probably provide you with a decent entry point. This looks like a good longer term short, especially with it violating that major 200-day moving average. I think I've given you a lot of stocks to take a look at. I've shown you how to structure your trades. Be careful right now. Anything can happen. If we get stimulus bill passed, the market's going to take off for a bit. You don't want to be overly exposed as far as swing trades. I've told you I am on the sidelines with my swing trades right now. I'm primarily day trading. If you're compelled to try and take advantage of a couple of swing trades overnight, I think you've got to favor the bearish side. And I would try and be in and out of those trades by Friday. That seems to be the deadline that they need to meet for that stimulus bill. If they can't reach an agreement by then, it's not going to happen until the election. And then you can expect some serious selling. That 50-day moving average on the SPY fails. Look out below because it's going to be pretty nasty. And the market is going to send politicians a message. Get the deal done. So all of this, yeah, things are going pretty good and we're continuing to talk. That is not going to pacify the market. The selling pressure is pretty heavy right now. It wants a deal. We're going to need one. The virus is starting to spread quickly. That's all I've got for you today. Please leave your comments. Give this video a thumbs up if you like the content, and make sure that you subscribe to this YouTube channel and turn on your notifications so that you never miss any of these videos, because I'll always have some great trade ideas in them for you. Thanks. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.